Amazon has been one of my highest rated stocks in 2024. It's one of two stocks that has changed my opinion based on excellent management. The other one is Uber. There were great concerns that when Jeff Bezos stepped down, Andy Jassy, the new CEO, would not be up to the task of managing this multi-trillion-dollar multinational company. Those fears have been put to rest. Jassy has done an excellent job amid unprecedentedly difficult circumstances as Amazon was disrupted by the pandemic significantly. So let's look at some of the reasons why Amazon is one undervalued AI stock investors can consider adding to their portfolios in September. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So let's start with sales. Amazon's net sales over the trailing 12-month period for the second quarter of 2024 was over $604 billion. $604 billion, a number that only trails Walmart. And that was up 12% year over year. If you look at Amazon's breakdown of sales, the North America segment generated $369 billion in sales, with the international segment coming in at $135 billion, and its most profitable segment by far, AWS, where the AI business is thriving, generated $98 billion and generated 16% of the company's overall revenue. Looking ahead, Amazon is in an excellent position to continue benefiting from several trends that are likely to lift revenue growth. For one, the most obvious, artificial intelligence. Amazon has invested tens of billions of dollars in AI. The company offers several tiers of AI services within its cloud services segment. The company has created its own custom chips for accelerated computing. It's all over the AI trend. It's poised to benefit, and it's already benefiting significantly. You can see that in the AWS segment, which has re-accelerated revenue growth. Its revenue growth in that segment had fallen to 12%, but now that the company has increased the amount of AI services, AI products that it offers, revenue growth accelerated to 16%. The other tailwind behind Amazon is online spending. Even though it generated $369 billion in North American segment revenue, which is primarily consisted of its e-commerce segment, there's a lot more room to go. Shopping online is so much more convenient than shopping in person. Still, so much of our spending overall is vastly weighted towards in-person spending. Over the last several years, that has increased in favor of online shopping, and it's likely to continue that way for a decade or two as an increasing percentage of shopping happens online. I'm not saying 100% of shopping will move online, but certainly a greater percentage than what we have today in the United States especially, which is hovering around 20% of total shopping happening online. I wouldn't be surprised if that moves up to 50% over the next 2 decades. And Amazon, being the largest market share player in that industry, is primed to benefit from that trend. The next reason I'm going to highlight for why Amazon is an excellent undervalued stock is the profitability is absolutely soaring. $54.3 billion in operating income over the trailing 12-month period. That was up 207% year over year. In the second quarter of 2023, this number totaled $17.7 billion. Amazon has achieved this, number one, by increasing revenue growth from the AWS segment, which is more profitable than the rest of the business overall. And for two, by improving the logistics and fulfillment side of the business, which has lowered the cost to serve and has increased profitability. Amazon has decentralized its warehousing, moving closer to customers, and that's allowed shorter distances of travel for packages, which has been a win-win situation. It's a win for Amazon because that reduces the cost to deliver the package. It's a win for customers because they get their packages sooner. These types of opportunities are extremely rare in business, where you can have a win-win, both an improvement in profitability and an improvement in customer service simultaneously. I give kudos to Amazon management for identifying this opportunity and capitalizing on it completely. All right, the next thing I'm going to highlight is the company's free cash flow, even after investing in business growth. So, Amazon's operating cash flow for a trailing 12-month period totaled a whopping $107 billion at the end of Q2 2024. And even after the company spent nearly $55 billion purchasing property, equipment, and things that the company needs, long-lasting assets to support customers, even after that, the company's free cash flow totaled nearly $53 billion at the end of Q2. That's a massive sum to generate in this business, which is not an asset-light business. Now, businesses with this type of capital investment requirements are hard for me to recommend because of how much money is needed. Unless, of course, the management of the business demonstrates skill in being able to deploy this level of capital effectively, which Amazon has demonstrated. The company has done an excellent job in allocating this capital in an effective way that generates growing profitability, growing cash flow, and solidifying its competitive advantages, because it will be hard for any business to ever replicate the fulfillment logistics network that Amazon has built. So finally, all of this would be not really important to investors, or I shouldn't say not really important, but it wouldn't be as attractive of an investment, even though the company had all those excellent characteristics. It wouldn't be such a great investment if the price was expensive, if the price was too expensive, which it's not. Amazon is trading at a forward price to earnings of 29. Given these metrics the company has delivered in free cash flow, profitability, revenue growth, and competitive advantage, 29 is undervalued for a company like Amazon. Now, even if we look ahead over the next 5 years, the analysts on Wall Street are expecting Amazon to grow earnings per share by 30% each year over the next 5 years, which is greater than the company's forward PE ratio of 29. Generally speaking, I like companies that have greater earnings per share expectations than their forward PE ratios. With Amazon, as an added bonus, you're getting a company with some of the strongest competitive advantages I've seen in its business segments. So for all those reasons, I think Amazon is one excellent undervalued AI stock investors can add to their portfolios in September. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.